This is Matthew Kratter's Bitcoin University. Today I want to talk about what makes Bitcoin unique, and I think this might be an interesting video to send out to a beginner who's beginning to get interested in Bitcoin. Bitcoin is unique because it has zero counterparty risk and zero dilution risk. Bitcoin has zero counterparty risk when you hold your own private keys. Counterparty risk is just the risk that an entity on the other side of a financial transaction or trade or custodial relationship does something that makes you lose money. For example, government bonds, corporate bonds, the type of bonds that a company might issue, have counterparty risk. For example, the government or company might skip an interest payment or may not pay back your original investment in terms of the principal. There's another layer of counterparty risk that comes with holding bonds and even stocks as well. Your brokerage firm or your custodian that is holding your bonds or stocks might go out of business. They might lend out your holdings to unreliable counterparties, which is called rehypothecation, and they may end up getting lost in that way. They may do something else that's stupid. In the US, if your brokerage firm fails, you're covered by SIPC insurance up to $500,000 worth of securities or $250,000 worth of cash per individual per institution. Of course, in the case of systemic failure, you have counterparty risk when it comes to the SIPC itself. So that's at least three layers of counterparty risk that comes with holding bonds: the bond issuer counterparty risk, the brokerage firm counterparty risk, and the SIPC counterparty risk, and even perhaps your own brokerage firm's insurance company's counterparty risk. And brokerage firms never hold enough insurance to cover everyone in a real emergency or crisis. Holding money in a bank has similar counterparty risks. The bank might refuse to give you your money back, which usually takes place at the worst possible time when you need the money the most. And it usually takes place under government orders, as happened in Canada during the trucker protests when Trudeau ordered the banks to freeze accounts of various truckers. It also happened in Lebanon. It happens all around the world. In Lebanon, people had to rob banks in order to get their own money back. A bank might just throttle withdrawals as well, so you can only withdraw small amounts at a time. This happens to people all the time in the US now when they want to withdraw cash. The bank will always come up with some bizarre reason why you can't withdraw as much as you want to. Another problem with banks, the bank might go under and you might be over the FDIC coverage limits. This is similar to the SIPC coverage limits in a brokerage account. These limits are $250K per individual, $500K for a joint account, and this would be cash in the bank. In a systemic crisis, FDIC insurance might not be able to cover everyone who has losses in the banking system, in which case the Fed will probably step in and print money to bail everyone out. And they did something similar with the BTFP program in March of 2023. This leads us to the second major risk that Bitcoin avoids, and that is dilution risk. Bitcoin has zero dilution risk, quite unlike fiat money. If you're finding this video helpful so far, I just ask you to help to support the channel. Click the subscribe button. That really helps with the YouTube algorithm. Leave a like, leave a comment, question, suggestion for a future video, and share this video with a friend or family member. There are other ways you can help out. You can also leave a thanks. If you just go under this button, you can click thanks, leave a couple of bucks. And the real reason to do this is not so that I get the money, but so that YouTube gets the money and is happy to get their percentage and then to promote the channel and promote this education. You could also click join here, get some emojis, and get an couple extra videos per month. And tomorrow I'm probably going to record another video for channel subscribers. So you can get that by clicking the join button. Bitcoin, as we said, has zero dilution risk, and there will only ever be 21 million Bitcoin. This maximum supply is enforced by node runners like you and me, who would never upgrade to software that dilutes us by increasing the maximum supply. This would just go against our self-interest and our incentives. By contrast, fiat has an infinite potential supply. So if you're holding US dollars and there's a recession or crisis, or even if there's not, the Fed will print up more US dollars and dilute your holdings. This is what happens over time. The money supply rises both through bank lending and through Fed money printing. But the Fed and the money supply are always increasing the money supply, causing your purchasing power to fail. This is the inverse side of inflation, what we call inflation. The government and central banks are always happy to bail out the banking system by diluting everyone's holdings like they did in the wake of the great financial crisis. Bankers got their bonuses while you and I got our purchasing power diluted. Now there's another asset that has zero counterparty risk, and that's physical gold. Like Bitcoin that you hold yourself, physical gold that you hold yourself has zero counterparty risk. And this is why we call both Bitcoin and gold what's called bearer assets. A bearer asset is just an asset that cannot be turned off, frozen, canceled as long as you're holding it. So gold in your pocket or Bitcoin on your hardware wallet cannot be turned off, frozen, or canceled, whereas stocks or bonds or money in a brokerage account or bank account can certainly be turned off and access prevented permanently or temporarily. Now, if you leave your Bitcoin on Coinbase or if you leave your gold in a bank vault, if you own the Bitcoin spot ETF instead of Bitcoin itself, BTC itself, if you own a gold ETF instead of physical gold, you no longer have access to a bearer asset, but you've reintroduced counterparty risk back into your setup. And there may be good reasons for doing this, but if you're interested in having something that cannot be turned off or having counterparty risk, then you definitely don't want to do this. For example, if you had gold in a bank vault in the US in 1933, it was stolen by FDR, by President Roosevelt, and put into Fort Knox as part of Executive Order 6102. You were forced to sell your gold back to the US government at a low price, and then they revalued the dollar and completely wrecked you. If you leave your Bitcoin on an exchange, whether it's Mt. Gox, whether it's Quadriga, there's a very good chance that you will not get it back, or you only get back a small percentage of it. Both Bitcoin and physical gold are bearer assets if held correctly. This is what they have in common. Unfortunately, only one of them is not subject to dilution risk, and that's Bitcoin. By contrast, the global supply of above ground gold inventories increases by about 1 to 2%, call it 1.5% every year on average. And that may not seem like much, but it means that the supply of gold doubles approximately every 46 years, as we can see here with this present value calculator. I'm using 1.5, and then I'm saying how many years does it take to go from 100 to 200, in other words, to double. It's about 46.5 years. You can think of gold, therefore, as a container that leaks economic energy over time. You're being diluted. There's not zero dilution risk because there's a lot of gold underground still, and there's certainly a lot of gold in the solar system as well, which we will be accessing in the coming decades. Gold was the best monetary hedge in the world until Bitcoin came along. Now Bitcoin is superior when it comes to not leaking economic energy, as well as having very, very good portability, unlike gold. You can move Bitcoin at the speed of light. You can store Bitcoin in your brain by memorizing 12 words. You can take your Bitcoin anywhere in the world. By contrast, try taking a gold bar through TSA or through customs or across a border during a crisis and see what happens. You're not going to make it with your gold. Conclusion, there's no other asset like Bitcoin in the world that has zero counterparty risk and zero dilution risk, and also has excellent portability. You can try to launch your own cryptocurrency that competes on these grounds and that has those same qualities, but no one will care. Your crypto will not have the same credible, forward, enforceable monetary policy. Your crypto will not have the same immaculate conception. Your crypto will not be able to grow under the radar and spread all over the world like Bitcoin did before governments woke up and took notice. Your crypto will never be able to catch up with Bitcoin's head start or compete with Bitcoin's massive market cap and 24/7 liquidity. So that really leaves us only with Bitcoin. And the sooner you start stacking Bitcoin, the better off you're going to be, especially as we enter a difficult period that will involve lots of inflation and lots of confiscation in the US and elsewhere. Bitcoin's zero counterparty risk and zero dilution risk are the best ways to protect you and your family's finances going forward in this kind of environment. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. Let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.